Hello and welcome to the view from the virtual IMF and World Bank annual meetings. I'm joined today by Jean-François Robin, Global Head of Research at Natixis CIB, to discuss the outlook for the euro area economy. Jean-François, in recent months, we've seen a resurgence of COVID-19 cases across a number of major European economies. What does this mean for the euro area moving forward into the coming months?
This was something a bit expected, but clearly maybe not with this magnitude. And what we see is probably the confirmation that the bulk of the shock is probably behind us, but probably the bulk of the recovery as well, in a way. So it's why we see more and more this kind of, if we have to put a number or a symbol here, it's more like a square root recovery, in a sense that we have a deep shock in the second quarter, a big rebound, probably double digit in the third quarter, and we have seen all these good numbers. But now in the fourth quarter, probably a bit of stagnation. So if you take just one number for France, for instance, we were probably at 98% of normal activity at the end of August. We are probably back to for France, for Germany, for probably even less than that for Spain, to something around these 90% economies now that we see a bit like the norm in a way, waiting for the vaccine.
Obviously, one of the headline news stories is around the euro area stimulus package, the recovery package. But alongside that is obviously efforts by the ECB through its bond buying program to provide further support. So is the ECB kind of emerging as the real hero here again?
Once again, central banks in general and ECB was very center stage in the recovery process that we have seen, and that's without the ECB probably we would have a big crisis of the eurozone again. But this time it was a little bit different because no crisis. So thank you, Christine Lagarde. But probably on top of the ECB, and that's something totally unusual for Europe. We now have this recovery fund. So not only we have the monetary policy, now we have the big step forward in a way towards the kind of first step toward federalism, let's say, with this recovery fund, because you have not only loans, you have direct subventions, you have some grants directly to the economy, and we see that with SURE, not only the recovery fund, but as well the unemployment scheme put up by the European Union. So we have seen some major steps in the institutional framework of Europe. So this time it's a little bit different. I hate to say this, but this time is a little bit different because not only we have the central banks and the monetary policy, but we have much better coordination on the budgetary side, and especially at the European level. And that's what is very unusual and new in this crisis. Once again, there are so many things new, but this one is probably one of the things to keep in mind.
Okay, that's interesting. Better balance between fiscal and monetary policy across the euro area. And just a final question on the ECB here, really around the relaxation of the leverage ratio for euro area banks and what that will mean, I guess, for the banking system and for the wider economy moving forward.
I think that's part of the global toolkit of the ECB to try to play out with to provide a lot of liquidity, to cut rates and to do quantitative easing, lots of different things, but as well no shortage of regulatory relaxing, and that was one of the big announcements by the ECB. But on top of this toolkit, which is due to try to do lots of different things at the same time to be more efficient, this is as well a little bit of a response for European banks to be on a better level playing field compared to the competition, especially from the US banks. And we see that banking sectors are totally different, one side of the Atlantic to the other. In Europe, we know that 70% of economies are financed by the banking sector, especially during this COVID-19 crisis, where the banks have been center stage to provide the money from the states with these guaranteed loans going through the banking system. So lots of things have gone through the banking system once again in Europe, as opposed to the US, which is much more a market economy. So the idea there is to make sure that the banking sector, which is probably more active in this COVID-19 response in Europe, is not penalized in terms of mandatory ratios.